We're expecting growth in emerging markets to pick up next year, but to still remain below pre-financial crisis levels. But it's important to note that there's a huge amount of uncertainty in the outlook. First of all, we have the impact of the Trump presidency, and that could have a major bearing on emerging market growth prospects. It much depends, though, on the direction his policies take. If the fiscal stimulus is large, it could actually have a positive impact on emerging markets, particularly those who export commodities. On the other hand, depending on the level of the trade protectionist measures, then emerging markets could suffer, particularly Mexico, of course, because of its geographical proximity. Looking at Brazil and Russia, we're actually seeing those two economies return to growth in 2017, albeit weak. And we're also expecting to see the Indian economy continue to be the world's fastest growing major emerging market. And this growth is driven by strong consumption and an improving trade balance, and also by increasing business confidence. But once again, there's also an element of uncertainty here, and that's stemming from the government's demonetisation policy. So the government have withdrawn the right to use the 500 and 1,000 rupee notes, and this is having a huge impact in a cash-reliant economy like India. The uncertainty arises because much of the damage to the economy depends on how fast the government are able to roll out replacement banknotes, or how able and willing Indian consumers are to move away from cash. And this in itself is a huge challenge. India has fewer financial cards in circulation than Brazil, even though it has a population 6 times the size. And also it has fewer point of sales terminals than Spain. So moving over to away from a cash society is no mean feat.